Good morning. I'm listening to Gene Munster. I like him. YouTube Studio. Morning, John. I'm going to turn on my Do Not Disturb. And we're going to monetize this mofo. Daddy needs to be paid. Live. You might hear CNBC on in the background. I'm going to turn the volume down here in a bit. Actually, I'll turn it down right now. Okay, let's see. Let me just refresh so that we're sure. Morning, Scott. Morning, Joe. Morning, Chris. Okay. Now I've got to go and put it on here so that I can see it. There's live. Let's see if I show up on live. No, I don't. Where's live? There it is. I gotta get a new thumbnail for live. I think that's what I need to do. Let's see. Nope. I gotta close it down. And I'm right-handed and I'm using my left hand, so it's called The Stranger, for those of you that don't know. View channel. There we go. Okay. Yeah. Everything's ripping. The market data, let me see. Did it update at 8 o'clock? Probably did. No, it hasn't. Look at the U.S. equity sectors. I mean, yesterday, everything's down 1%. Healthcare was the big leader at down 0.93. And you look at the 52-week range, and you can see utilities still down. It's down 1.66%. It was way down. Industrials up at 52-week highs. It was only down 1%. So, morning, Daniel. Let's do some scans. Have I mentioned SMCI? There were two outstanding stocks yesterday, and it was Eli Lilly and it was SMCI. Nvidia held up a little bit, not as much, but got everything's green today. I mean, and it's kind of the big learning that I have is we're gonna do alpha picks. Get ready, because there's going to be a lot of advertising. Because TrendSpider has an incredible sale going on right now, by the way. 67% off, $5.95 for 12 months. And it's only going on for another 16 hours. So $5.95 is unbelievable. If you want to pay $86 a month, here's the thing. With these two things in my algorithm, if you have a big enough portfolio, if you're trading enough, that's nothing. That's nothing. The amount of money that I've made over the years just using the amount of money just on SMCI. Let's look at SMCI. Since January, if you got SMCI and you put $500 into that, you just paid for your Seeking Alpha for TrendSpider, whatever. You paid for all the tools. You just paid for all the tools with using the algorithm. So don't want to hear that it's too expensive. I don't want to hear that I put too much in. No, I'm going to remove this one. Remove this segment. There we go. And let's go to the market scanner. Because when you sign up for TrendSpider, I give you my scanners, my algorithms, and I got to come up with more. Larry, one of the things I have for maybe the upcoming months is to do a couple of new strategies. I'm just not great at strategies. It took me a long time to come up with that 4-hour strategy. But the good news is if you join the Discord group of TrendSpider, they have some shared strategies over there. It's really good. And if you go on Jason's office hours, he freaking builds them for you. SLB, Arch, levered ETFs. I bet we got some. Yeah. We got some FNGD, TECS, PSQ, HIBs. SQQQ got to cross up. DRV, SDS. Be very careful with inverse ETFs right now. I said it yesterday. I didn't want to go short. And the reason I didn't want to go short is I'm super uncomfortable short. I'm 6 feet tall. 5'11". Well, and I measured myself the other day. And I think I'm 5'10" now. I think I'm shrinking. I don't know. I've always been 5'11", but either I'm shrinking or I slouch, and I do slouch a lot. Match. This is one of Brad Ferguson's. Is it Ferguson? I don't know. Freeman. Stock market nude. That's one that he believes in a lot. Match. I don't, but it's a growth, so it should be in there. Nothing on the Dow. I mean, I would not be surprised if we see like 4, but after today, I think you'll see a lot of XEL, Charter, TMUS. And let's look at the S&P. Okay, and then we're done with scans. AIG. It's hard to, after a day like yesterday, to have anything show up on a scan as a cross-up or... but did you get into any of the names? You can still get Shopify under 80. I posted this yesterday. I still think this is the right thing. Get it with a 7 handle. Let me see. Okay. Oh, by the way, Alpha Picks. I'll say it on the podcast too. Alpha Picks at $89. This offer ends. I think it's tonight. It might be tomorrow, but it is one of those 2 days. And Alpha Picks, they emailed me last night. Seeking Alpha did. Yes, the price is $4.99 afterwards. They're giving me a discount. That discount after today brings it down to $449. So it's only $50 off. So if you want this for $89, where it's going up tomorrow to $449, that's because of the performance. That performance is unbelievable. Unbelievable. Yeah, Uber's up 7%. I mean, let me just write down quickly. Let's go down my stock section. I got to break this up into sections. Uber buyback boost. Don't sleep on this one. Advertising is driving. Let me see. There's got to be a Seeking Alpha. And let's go to Uber. I think they announced a big buyback. Yeah. Let's see. Home. Palantir downgrade. Inflation is still a problem. Breaks down the CPI points. Mega caps rebound. FANG are among pre-market movers. I still like the list that I get. Blackstone announces growth investment in 7 Brew. Sells $4 billion of Amazon stock after Miami move. Lyft shares go on a wild ride. I got that one. Earnings call. Dollar Tree looks more attractive to Evercore than Walmart or Target. Okay. Are there other forces at play? Here we go. This is an interesting one. This is, I mean, if you look at ARM, it's acting like a meme stock. I mean, it's acting like, and it's not a short squeeze. It's nothing like that. But this is a 16% 4-hour candle. 16% period. This is a 28% candle, per 4-hour period. Yesterday, we went down 4%. We went down 2%. So, again, we're using that 9-day as support. I don't think that you get into this one, but it's nuts. It's crazy. Okay, let's look at other ones. Boeing. Bank of America, I want to say get out at 33. Cleveland Cliffs get in while it's under 20. Disney, hold on to it. Just don't buy it at 110. Wait until it goes under 100. Wait for the shareholder vote. Coke, under 60. I mean, you had your chance to sell it over 60 yesterday. I trimmed a little bit, but it's in my tax account, so I can't really sell a ton of it. Meta, 465. I mean, I think 450 is more realistic in Meta. Microsoft at 408, just add it. Just buy it. Netflix is putting in some type of capitulation here until their next earnings. So, I mean, I'm going to be adding to this. I think it's a $700 stock. If you look at a long-term, which is a weekly, we still have room to go to get to the highs. NVIDIA, I think it's an $800 stock when they report next week. I think everybody's hyping this one up. I think Jensen Huang would not be out there unless they had some type of crazy stuff. Scott, remember, do not rely on me for your sleep. This is a very key point in this. I have, a different risk tolerance than you. Doesn't mean that I'm right. Doesn't mean that everything today isn't going to go back down tomorrow. And I'll talk about it. One of the key things that in your mind, I think you've got to figure out if you're going to be on quote unquote my journey, because my portfolio is so geared towards tech and AI and things of that sort. You have to decide, is inflation going to drive this market? Meaning don't fight the Fed, or is AI going to drive the market? And I think both in a certain sense can be true, because if you've got inflation driving the market, the Fed's going to keep rates higher. If this is just an AI bubble, and as they keep rates higher, you can expect bond rates to go up, which will bring the stock market down. If this AI thing is just a bubble and NVIDIA doesn't report well next week, expect a complete collapse. You can expect a 10 to 20% pullback within probably a week if NVIDIA comes out and says, hey, we no longer have pricing power. I think that's going to take a lot down with them. I don't think that it takes SMCI down, because I think SMCI has a different business model and a different multiple than NVIDIA. It will bring it down, but it doesn't crash back down to 400 in my mind. But that's where my mind is. What's driving this? I think Gene Munster put it best. I think we're in a 3 to 5 year bubble. You're going to have days like yesterday. You're going to have, pullbacks. It's going to be 2 and 3%. There might even be a 5% day. And then you're going to feel it. I still remember the first day I was down over a couple $100,000 back in 2020. I didn't have, in 2007, 2008, I didn't have that large of a portfolio. I had a big portfolio for my age. I was 35, 36. I had a big enough portfolio that it felt like losing $200,000, $300,000 in a day. But once I got to 2020 and I had a good amount of money in the market, that March COVID stuff, I didn't sleep. I had just left my job. So I didn't sleep. It takes a lot to hold on to that. My parents got completely out of the market. They were, close to 80, and they got completely out. They sold out. And it was, like they said, that during the 2007, 2008, they sold out as well. They made the right decision. They saved something like 40% by getting out of the market. They thought they were doing the right thing because they had timed it the previous time. It took them until July to actually get even somewhat back into the market, and they lost that entire road. So I don't want you to say, "Hey, thank you for putting me on kind of calming me down." I want you to understand and look into yourself and say, "Can I deal with if Gary's wrong?" Because I ain't gonna be right. There will be times I'm 100% wrong. You got to look towards, and this is what I was telling my friend the other day. You guys know I went to Nashville to help my friend kind of adjust her portfolio and look at some things and sorts of that. If we look at a monthly, and I brought up the Bob article. The Bob article is super, super important. Remember, Bob just bought into the market. He wasn't dollar cost averaging. He just bought at the very highs. But over, if you even look at a quarterly of QQQ, let's just go to, S&P, because the S&P 500, SPX, because we can't run that one, but we're going to go to yearly. And this does go back, I guess it goes back to 1970. The whole year didn't feel good in 1974. The whole year didn't feel good in 2008. Even 2009, you ended up green, but it was up 23%. Didn't feel good if you bought in 2007. So, I do things that part of me teaching you guys is and kind of getting out here and spouting off the way I do is, hey, this is the way I view the market. I'm wrong as much as I'm right, but history has a sense of protecting me. And so I do, yeah. Morning, Rabid Badger. Okay, let me get on this. Put together my notes. Okay. We're going to look at this. Okay. Wah. Biggest movers, the Lyft fiasco, Walmart to buy Vizio, Shopify. On the pullback, ETFs. Uber gets a big one. We're going to look at ARM. BLDR. Morning, Scott. I did not make that one up. That's a Nick. That's a very famous. If you hang out with enough traders, that they will say that completely. We're going to have a long show because I got a lot of links. So I got a lot to open up with and to go over. I know what these are. Morning. If I didn't say good morning, Scott.
Steve, let me ask you about the iPhone and the Zune, if I may. The Zune.
That's a great clip. What you have to make sure of, though, by the way, just keep an eye on your portfolio balance. If you were down less than the major average that you want to track yesterday, it's good news. If you were down more than the major indices that you want to track, that's bad news. That means, well, I shouldn't say bad news. That just means you may be not proportioned in your stocks correctly. So, it's portfolio check time. I mean, yesterday is just a portfolio check time. If you're not comfortable with some of the things that you have in your portfolio, portfolio check. That's all it is. So, okay, I'm going to hit record because I got everything that I need. Good morning. Happy Valentine's Day, lovers. It's Wednesday, February 14th. I was just telling people, if you use your left hand, that's called the stranger. And if you want to look it up on Urban Dictionary. Because I'm righty, so when I use my left hand, it's called the stranger. If you're lefty and you use a righty, it's called whatever it is. But happy Valentine's Day. It was bloody yesterday, so maybe you didn't get lucky yesterday. But it was just red across the board. There was nothing good about yesterday. Look at these. And this is why I like Seeking Alpha. You can go to the market data and you can look at the day. Every sector red. The biggest winner of the day was the healthcare sector because it was only down 0.93, but you're still up near 52-week highs. That's why I love these sliders. You can see where we traded to. Industrials closed the day close to their highs, and they were down 1%. Real estate closed the day close to their day highs, and they were down 1.83%. So take a look at these sliders. Understand yesterday is a day that you want to take a look at things. How do we look on the Qs? Because I'm trying to track the Qs. And how do we look on the Qs? We're still in as far as the algorithm goes. The MACD's crossing down. The RSI's in no man's land at 50. Do any of these things don't make sense? Well, go over here to my newsletter and the education center section. You can find out what all of these things mean. But again, MACD, it's up there. The RSI, it's coming off of 70, going down to 50 real quick. We had a nice pullback here. If we look at kind of the pullback from the highs here, from the first morning to the lows of yesterday, it's about 3.49%, 3.5%. It's not that bad of a situation. Now, if we look and we just say, okay, where are we go back to the October where the algorithm got you in November 1st on the Qs. Where are people holding? Well, most people are holding here around 410. Does that give me some pause? Yeah, because we've kind of used this 425. Look at that volume shelf. Just look how perfectly this volume shelf builds up here at 424. We bounced up there. We're at 428, 430 in pre-market. We're up about 0.5%. So it's providing some support. Do we get the next bounce? I don't know. I mean, there's a little gap up here all the way up to 434. Maybe we start to fill that gap. Nothing's really clear in this market. It's about as clear. If you saw, Zuck yesterday had a video out where he said the Meta Quest Vision, or I guess that's what it's called, the Oculus, is better than Apple Vision Pro. It reminded me of this. Does anybody remember Steve Ballmer?
Getting some traction, then Steve Jobs goes to Macworld and he pulls out this iPhone.
Yeah, this is about the Zoom.
When you saw that?
$500 fully subsidized with a plan? I said, that is the most expensive phone in the world, and it doesn't appeal to business customers because it doesn't have a keyboard, which makes...
Yeah. Zuck's talking his own book. Zuck's talking his own book. Understand Zuck's talking his own book. So don't think that Zuckerberg coming out against the Apple Vision Pro is a ding against Apple. Again, they laughed at the iPhone. Don't think that that's a ding. Now, here's fair warning for everybody. I'm about to go into an ad spree, an affiliate ad spree. And the reason is everybody's having sales right now. The first one I want to bring up is people were hounding me about when's TrendSpider going to be on sale again? Well, it's on sale. 67%. It ends today. It's a Valentine's Day sale. They just put it up. I wasn't notified about it. I just saw it yesterday, but it's 67% off. How do you get it? You go to my link tree, click on this top link, best offer available. I don't think DSP 25 is going to get you an additional 25%. If it does, fantastic. What do you do afterwards? You basically go up here to the upper right and you'll see an email. You email me at dailystockpick3@gmail.com. I will send you a welcome letter with all of the algorithms, the watch lists, and the scanners that I use every day. So when I go on vacation, you don't need me to be here. It's nice that you show up, but you can do this on your own. So you don't have to listen to an hour and a half podcast. That's the benefit. And if you don't have a large enough portfolio, if you don't have enough money in the bank, if $595 is not something that you think you can make in trades over the year, TrendSpider is not for you. Make sure this is budget friendly to you. Again, it takes the trading, in my mind, and everybody that signed up with me, it takes your trading to the next level. You understand it a little bit better. Your moving averages, everything of that sort. That's the first sale that we've got going on, okay? TrendSpider is the first sale that we've got going on. Second sale is the regular sale of Seeking Alpha. This is Seeking Alpha Premium. This is the second link in the link tree. It is Seeking Alpha Premium. I love Seeking Alpha Premium. You will see me through this podcast go through a bunch of Seeking Alpha articles, a Seeking Alpha analysts, Seeking Alpha things. Everything that I do is on Seeking Alpha Premium. This is $189. Again, if you can't afford the $500 for TrendSpider, I think this is a good second option for you because you do have charting. You do have portfolio breakdowns. You do have analysis. You do have the quant. You get to look at the quant rating, which all of their analysts use. You can look at those things. It's a great, great tool. So that's the second link in the link tree. The third link is Alpha Picks, and this is the big one because this one ends today or tomorrow. I got an email from Seeking Alpha. This price is not $199 afterwards. This price afterwards goes to $499. It was confirmed to me yesterday, $499. What's my sale after this? It goes to $449. They are giving me a $50 off coupon. So today, if you're thinking about Alpha Picks, remember, Seeking Alpha Premium is different than Alpha Picks. Alpha Picks is a buy and hold strategy. This is a 2 data-driven stocks picks per month to hold long term. It's alerts when the portfolio shifts to sell, but it's 2 stock picks per month. Access to Alpha Picks over 20 stocks on day one. You get access to all of their picks on day one, and you can do it. We've had people who have made their $89 back by just simply putting, $1,000 into 4 or 5 different stocks. SMCI may be one of them, and they've made their $89 back. So again, there's 3 tools. It's TrendSpider, which is the most expensive one at about $500, $600 for a year. There is Seeking Alpha Premium, which is about $189 with my coupon for a year. And then there's Alpha Picks at $89. But the one that I want you to jump on if you're even thinking about it is Alpha Picks because this sale is over at the end of the day. TrendSpider has regular sales, not as good as this one. If you've been contemplating TrendSpider, this is the deal to jump on. I don't know what their plans are for the future, but this is the deal to jump on for $595 for the year. Seeking Alpha Premium, I got that $50 coupon whenever you want. It's a great, great option, and you should have an account with Seeking Alpha, by the way. So those are the 3. The fourth one that I think is a pretty good one, it's how to support this podcast the most, is my newsletter. And just sign up for the free one. And if you like what you read, and I'm not telling you to sign up for the paid one, but if you like what you read and you want to support me, then just support me. I do have a paid newsletter on the weekend that gives you more education and more paid stuff. So it's very simple. It's super, super simple, super easy. One of the in the private Facebook group yesterday, Sean, he said, FYI, the office hours with Jason on TrendSpider are fantastic. YouTube.com/TrendSpider. And so if you want to go to office hours, Jason has these regularly. Today's office hours with Jason did a great job. Step-by-step walkthrough for any beginner on the platform. That's this one. And if you have the alerts on TrendSpider, you can see when he's got office hours. He is unbelievably the master, absolute master at TrendSpider. And so if you want to see TrendSpider in action, go watch this office hours. Again, step by step for beginners, what it is. It is fantastic. It is unbelievable. But those are the 3 tools that I really want you to jump. The 2 that I think you should jump on if you've been listening to me for a while and haven't taken advantage of are TrendSpider and Alpha Picks. I use all 3. I wouldn't tell you to use them unless I thought absolutely it would take you to the next level. So that's what I think. One part of Seeking Alpha Premium is you get this email in the morning. And I thought this was interesting because, yes, SMCI held up yesterday. Yes, Disney held up yesterday. Yes, Eli Lilly held up yesterday. Shopify, big loser. Palantir, big loser. Goldman Sachs, big loser. But more interesting, the quant ratings. So Eli Lilly went from a buy to a hold. TSM went from a strong buy all the way down to a hold. It skipped the buy. And Shopify went from a strong buy to a hold. I don't believe the Shopify one is correct. But I love getting this email in the morning. Then I love doing the analysis of it. I think it's a fantastic way of absolutely staying on top of your portfolio. And again, it comes with Seeking Alpha Premium. So I think that was a good one. Let's see. All the signs were there yesterday. On February 12th, Kramer, despite weeks of gains, Kramer doesn't see a market-wide decline soon. The guy's an absolute effing legend. I mean, we should have known it. February 12th, he doesn't see a market-wide decline soon. What do we get yesterday? 2 days later, or the next day. I'm sorry, this was February 12th at 6:45 p.m. The guy's an absolute legend. An absolute legend. And if you want to send your lover a little card, I'm bearish on you from Loving Jim. This is one of my favorite accounts, by the way, the inverse Jim Cramer. It's unbelievable. But all the signs were there. Cramer, bullish, blah, blah, blah. He was bearish yesterday. He said, yeah, well, I think we have a pullback, blah, blah, blah. And I think it's going to last for a couple of days. Well, what do we see today? We're green. The douche. Again, the douche. Today's defining leaders. This is an interesting list because it points out everything that was up yesterday. It's an interesting one because some of these that are down here, like Netflix, I like. Uber was at under 70. Nvidia at 721. It was down a little bit, but Uber, AMD, Netflix. I think you buy those. Again, it's an interesting list. Take a look at it. I would start to look at days like yesterday. What are the stocks that you want to get into? Because I do think it's a buying opportunity. Gene Munster puts this fantastically. NASDAQ down 2%, which begs the question, which force will win the battle for tech stocks, inflation or AI? I was just on YouTube Live telling people, in my mind, this is the NASDAQ, and this is kind of the battle that's going on. You see yesterday where you saw a dip down here. You see in December where you saw a dip down here. There was a lot of a talk, and remember the phrase, don't fight the Fed. That's a big phrase. You don't want to fight the Fed. When the Fed says we're not going to reduce interest rates in March, and the market says, oh yeah, we'll see that and we'll raise you, then inflation comes in hotter than expected. That's what happens yesterday. Now, what happens today? Does AI take over? Is the AI train still running? Does Nvidia continue to go up? SMCI right now in pre-market, it's at 816. Nvidia right now in pre-market, it's at 731. Palantir is at 24. Qualcomm back up over 150. Shopify almost over 80. It's at 79. Uber is up 7% at 74. So I think Gene Munster puts it correctly. I'm betting on the AI train, personally. Okay, I got to sneeze. I got to go get my water, too. I'll be right back. I had to get water. Scott, that's nice. Thank you so much. Diane, I haven't watched the latest webinar. I have to. I think, correct me if I'm wrong, Diane. They are actually really, really good at talking about fundamentals and what goes on there. I really like I think I watched 2 of their webinars because Alpha Picks just got me in late. So, yeah. Okay. Let me start recording again. Okay. Sorry, I had to go get water. Shay, you guys know I'm such a fan of Shay and his tweets. If you're not following on Twitter, you absolutely should. How will growth enterprises manage upcoming explosion in data driven by AI's growth? I just said I'm all in on AI. Those are the stocks. I mean, I don't have MDB. I do own Snow. I own NVIDIA. I don't own Datadog. Yesterday's earnings scared me a little bit about Datadog, but I don't mind buying Datadog on the drop. CrowdStrike, I got out of mistakenly. I do own Palo Alto Networks, and my dad owns Fortinet, and I've traded Fortinet before. But CrowdStrike is the one that I want to do. Securing network for data, net, Cloudflare, absolutely. And analyzing the data, Palantir. These are great stocks. Great stocks. This one, Goldman. CPI largely reflected state-of-the-year price increases for labor-reliant categories as medical services, car insurance, and repair, and daycare. We assume inflation in these categories returns to previous trend in February and March. That's key because remember yesterday, it was all about CPI. Well, if CPI was just temporarily elevated, then what we see going forward is a reduction in inflation, a reduction in the Fed rate, and so then it takes off the table, don't fight the Fed. If they're not staying higher for longer, then this market will go up. So understand you've got to take a look at these things. NVIDIA price target goes to 825. 825. I don't know that it will get there. It's going to be quite a stretch to get there. But the last two earnings that NVIDIA has had has caused gap ups. Doesn't mean you will get another gap up. But this range right here is what I was telling you to trade in before. We've broken out well above that, and it's continuing to run. In pre-market, excuse me, you're up at 731. I felt that cough coming on. 731 in pre-market. I don't know if you should buy it here. Its earnings are coming up next week. That's a tough one. I'm just not going to hit pause anymore. I'm coughing. You'll have to deal with it. But the MACD is super high up here. The RSI has just been trailing between 60 and 80. I mean, it just hasn't come down. The volume's still there to justify this, but into earnings next week, February 21st, that is going to be a key day for the market in my mind. And again, remember this article that says NVIDIA's price target was raised from 625 to 825 by Mizuho. This is going to be key for the market. I've left all these old notes in. I'm going to take them out because this range no longer has any relevance whatsoever. Look at the last earnings. You dipped down. Look at this earnings. You went up and then you went down. This earnings, I expect you to probably come down here to about, if we pull this back to the last time that let's look at this because it is everybody that bought after 500. Where's the shelf at? Let's look at where the shelf is because the shelf right here, if we look at this, there is a shelf up here at 692. I think 700 provides you some support. I think right back here at 622. That provides you some support. Back here at 555. Those are big tranches. And the volume has just gotten up. The reason the volume's here is because you had a couple of days here. The reason the volume's here is because you had a couple of days here. It's no more than a couple of days. So if this hangs out up here at 721 for a couple of days, expect that to put in a level of actual support. But it's going to depend on these earnings. And those earnings do scare me. Don't make any mistake about it. The earnings absolutely scare me because that's going to move the market. Now, Brian Sullivan pointed out yesterday, and he pointed it out in this video, random but true, but interesting. But it's 100% true. NVIDIA keep going up, double, triple, whatever from here. AI's message, just an historical reminder of whatever stock you own, markets move quickly. NVIDIA is just like Intel back in the late 90s. So watch this video. If you're in NVIDIA, subscribe to the newsletter. I will post this tweet, but watch this because Intel's run from 1995 to 2000 was 1,727%. It just dropped after that like a brick, like a effing brick. Now, NVIDIA's run over 5 years is 1787. So it's very, very similar. If we go back here and we look at Intel, I'm going to look at Intel and I'm going to let's go to a yearly because we're just going to look at a couple of candles here. We're not going to look at the intra kind of day. But if you look at 19 here, 1995, right here. Say you bought in the middle, and then to 2000. 2000. There you go. If you go, well, I guess they're going from the bottom, so 1995 down here to the top. 1,800% right there. What'd you do in the upcoming year? Well, if you bought at the top here, you lost 80% in the next year. 73. So it moves fast. Understand, I don't think that's where NVIDIA is going, but this video is a cautionary tale. It's really, really good. I like that video. NVIDIA, to counteract this one, it's not a bubble, has 3 times in 435 days to be a .com bubble levels. This is the Cisco price during the .com bubble. NVIDIA stock price has lagged about 25 years. So again, that's Cisco. Cisco was supposed to reinvent the internet, rebuild it, blah blah blah. It's a cautionary tale. So I want you to make sure that you're comfortable with your NVIDIA going into earnings. If you are nervous, sell. There is nothing against taking a profit. Taking a profit and having it move higher doesn't feel good, but don't watch it. And if it's justified to go higher, you can buy it at a higher level. Maybe you missed it, but wait for 3 days and wait for it to come back. Shopify is a perfect example. Perfect example. At 90, should have been selling it. They had perfect earnings. Now at 79, I'm adding back to it. So perfect example. Super Micro, SMCI, this stock has doubled in 2024. So far, it's doubled. We're February 14th, and it's doubled. SMCI has surpassed NVIDIA in terms of long-term performance with a 5-year return of 4,300% compared to NVIDIA's 1,800%. This is a fantastic analysis. Go and read it. It's going to be in the newsletter. BLDR was one that was interesting. It was brought up to me from a listener. I think it was somebody, Scott or somebody. Somebody brought it up. Hold on, I need a drink. Oh, man, I got the coughs. Okay. We're going to move this up. Oh. Your boy's got tears in his eyes from coughing, so I paused it again. But BLDR was Builder's First Source, was a stock that was brought up to me from a listener. I forget who, but it's, I was playing around with Seeking Alpha's app. Seeking Alpha's app is awesome. And I was looking at the latest analysis strong buys, and it's BLDR. BLDR is a strong, it's a 5. So it's got a rating of 0 to 5. Okay? That's what the quant is. 0 to 5. 5, perfect score. It's a perfect score. Now, BLDR, let's go over to Seeking Alpha and look at BLDR so we can see what its metrics are. But it's got a super, I may have taken this for granted and thought, hey, it's Builder's Resource. I'm not exactly, happy about it. Seeking Alpha Analyst 5.0, 0 to 5, 5.0. Quant rating 3.19. This from February 12th, strong buy. Go and read this article. It's ranked 20 in its industries, its industrials. I don't know. I mean, maybe it's a much better buy than I think. But I thought that was interesting that it brought it up. It's been on a crazy, crazy run. I mean, this has almost doubled since October 30th. So it's a building supply company. That's what's crazy about it. ARM. ARM has gone absolutely nuts. Is it a meme play? I don't think so. I went over ARM yesterday. Be very careful with this name. Remember, March 12th is the key date for this. SoftBank may release. They own 90% of the stock. 7% is currently floated out in the market. ARM is up, let's see, it's at 133 in pre-market. It is up 11% today. Understand, those levels are not sustainable. It is not an NVIDIA. It is not an SMCI. It is an expensive stock. If we go over here to ARM to FinViz, You can see their financials. They've got a 123 market cap. If we go to ARM here, let's see if they have any of the financials over here on Seeking Alpha. Because I didn't see any on revenues. I mean, $2 billion total other revenue, $2 billion, and they've got a market cap of $123 billion. How is that possible? Again, I don't think it's a meme stock. I don't think it's a short. I just think it's overvalued at this point. Honest to God, I think it's overvalued. I'd be very, very wary of a $133 price. I think people are taking this up unnecessarily. I just don't think it's worth. I'd rather see you in SMCI. Much better optics on SMCI than that. So ARM is a little nuts. Uber. We talked about Uber being up almost 7% at 74. This was a buy under 70. Uber gains after aggressive 3-year targets, adding buybacks to the mix. They're going to buy back a ton of stock. Get in on this one. Advertising is driving this one. It's ranked number 1 of 8. So Uber is the big one. We will go into the Lyft situation when I go over earnings. But Uber, DD Global is second. Lyft is number 4. Lyft is, they've shown that they're going to be a good company. So Lyft might be one that you want to get into, but yesterday's fiasco looks a little bit bad. Yesterday, again, Seeking Alpha. ETFs by quant rating. A lot of these are triple levered. There's a Bitcoin miner, TECL, which is the triple levered bull on technology, SOXL, which is up like almost 10% today, I think. Let's look at SOXL. Again, Seeking Alpha's app is really, really good. SOXL is up 3.94% to 38.29. I think it was up earlier, way up earlier. But this is just a great list, and you can see it. I posted it in Facebook, but get Seeking Alpha Premium. I'm telling you, it is really, really good. Want to know why to buy SHOP on the dip? And the reason is, look at this. Revenue and earnings per share growth. Look at that. It's going up. And yet it was pulled down by 10% yesterday. 10%. Get this one while it's under 80. It's at 78.25. It's putting, I know I always say, hey, wait a couple of days until after earnings and things will shake out. Just get this at 78. I think it's a $90 stock again. We saw it. It was 90. Look at the long term on this one. The long term on, you're crazy if you don't get it. And I was saying you're crazy if you don't get this at 50. The e-commerce, this is a great company, and it is run phenomenally well. And yes, you're under the 200-day long term. That 50-day is still moving positive. I still think you've got forward momentum on this. I still think it's a great buy. That's all I'm going to say on Shopify. I think that this chart shows it exactly. It's a fantastic buy. Vizio surges on report. Walmart is in talks to buy it for more than $2 billion. Roku is I think somebody asked me to look at Roku. Roku is very simply a company that is looking for a buyer. They can't make money. They're looking for a buy. Nobody wants to buy it. Walmart wants to buy Vizio for their smart TV platform. Roku has smart TVs. Nobody wants to buy them. That's the crazy thing. Let's look at BMR, because BMR is still moving up, by the way. Still moving up. This is Beamer Technology. I think it comes out tomorrow with NVIDIA. Yeah, it's up. Let's see. 18%. It's at 1660. Yeah, 15%. 1625. It's still moving. Understand, you can trade this on a 5-minute chart. I went over it before. I'm not going to go over it again. Let's talk about earnings. So Lyft went crazy. So initially when they were reported, and I was watching their earnings, I was like, I own Uber. Maybe I should get into Lyft. I don't use Lyft, but there's been a lot of positive things about Lyft. It's cheaper than Uber, significantly cheaper if you want to hail a rideshare. You can compare the two. And you can see what they're going to charge you for it. They have better driver interactions, I think, with Lyft. It's just a better company. It went up 12% based on the fact that they said that their guidance, they would be free cash flow positive in 2024, which is huge. Again, it's huge. Then the stock went up 80%. And I'm going to go over here to the actual chart. It went up 80%. Nobody knew why. And it was all 100% quant, like algorithmic trading. It wasn't anything. And we're going to include extended hours here because I don't want to, I want to show you what happened. Because you could have traded this, and I was thinking about doing it on confirmation. You had total confirmation here, okay? You could have bought it. This is a 5-minute candle at 14 when it came out. Yes, you were up by like 12%, but 14, you could have bought it here. You could have sold it at 20. And then what happened? So here's what happened. There was a line item in a note that said adjusted EBITDA margin in the report. They said it was going to be up 500%. That was the adjusted EBITDA margin. The actual profit, it said it would be up 500%. The CEO comes out, or I'm sorry, the CFO comes out and says, it's not going to be up 500%. That was a typo. It's actually only going to be up 50%. Or 500 basis points year over year. It wasn't even percent, 500 basis points. So as of 5:30, the earnings release on Lyft side had not been removed or corrected. Volatility since declined and Lyft is higher 18%. It's still up. It's still up 28% today. So even if you bought at 14 and you didn't get out at 20, do I think it's going to 20? No. I think it's a good stock to get into. I think it's an opportunity to get into a stock that's not horrible. And if they do show earnings, I think it's good. Just call this calls into question good companies with good products, with good profits, which they don't have currently, with good management. The management is called into question. I don't think the management is horrible, but how do you let something like that slip? And then an hour into the earnings call, you say, oh, by the way, yeah, that wasn't a great one. The biggest stock movers of the day, we talked about Lyft. Robinhood was way up, surged over 10%. Robinhood, which I went over yesterday, I liked the thing of their app, popped 10%. Based on their revenue per user and crypto trading. Now, it's started to give some of that back. It's up 13% right now. It opened up at $13.65, trading at $13.39. I would completely expect it to come back here to the 12s. So I don't believe in this stock. I don't think they have a great offering. They have some things that are doing good. It's okay. Airbnb moved up 10%. On super strong earnings and guidance. It's giving it back. It's giving it all back. It's down 4.82%. We can look at this. Is Airbnb in here? No, Airbnb is not. So Lyft and Uber share price soaring. The other one, Cart, was way down. I said Cart. Instacart is way down. Large layoffs, including 3 of the C-suites. Which they said was for personal reasons. FYI, C-suite people, 3 at a time, do not leave for personal reasons. That's them getting rid of them. I don't order through Instacart. So, it was through a SPAC. I don't like this company, blah, blah, blah. The other big mover of the day was one that I had warned about because some people like this, and it's a meme trading stock. But it's Upstart. This is the AI loan company. They just have bad loans. So this is, Upstart is just bad loans. Here's what it is. Despite topping consensus in Q4, it fell more than 18% after its revenue guidance did not meet the market. The AI-driven lending platform for banks and credit unions expects Q1 revenue of $125 million, less than the $151 million consensus. So it's just a bad company. Just a bad company. Do not invest in Upstart. Don't think that it's a good one. I was playing around with the Webull app. If you don't know, I love Webull. And here's the top gainers yesterday in ETFs. Here's the top losers in ETF. Opportunities. Again, if you're long, then maybe you want to go in short here. If you're short, maybe you want to do puts or something like that on these things. I don't know. But I love that Webull app. So let's go over some social requests. Oh, by the way, Bitcoin up over 51,000. You know what that means? Mara is way up. Mara is up, let's see. Mara is up 12% to 28. It'll go to 30. You know, you had that Bitcoin drop based on the ETF. That's what you saw here. Now you're just getting back up. This could be a double top at 30. It could be the next leg in the platform. It could be the next leg in the move. This is a retail trade. This is not one that I think you buy and hold, even though I've been holding it. But I've added a little bit to it, like one stock when it was 15, and I should have been adding more. I don't hold a bunch, but Bitcoin's up at 51,000. I think it's continuing bull. I think we're in a bull market. That's what I've been saying. I think we're in a bull market. Yesterday, just a little speed bump in the bull market. Sakuri from Instagram wants me to look at PayPal. I said it before. Sakuri, if you're listening, you should be listening. You should be reading my email. All I'm going to say, I'm out. I'm done. At some point, I'm out. I haven't sold it yet, but I will. I'm waiting until after the earnings, after it settles down. It's settling here at 58. I'm out. No reason to stay in. So there's your PayPal. Lance, I didn't know about the private Facebook group until this week. Thanks for the ad. I've been listening to the podcast for a while. I'm on the paid newsletter. Added your Seeking Alpha picks. I say make money for the service. Yeah. I was hoping to get some guidance on the decision. We are a big Disney family. We get to go there a lot. I'm always paying attention to the crowds, and I watch the stock a lot. I have built a position when it was lower using options to drive down my cost basis. Super good play. My personal valuation of Disney based on a CapEx valuation, I show it has a fair value of $88, which is where it was. I mean, that's essentially where it was. So if you based it at $88, that's your floor. If it ever gets down near that 88, absolutely 100% buy it. I know this is low compared to other analysts. One I trust has a dollar cost fair value of 117. I am lucky enough to be in around 80. I have a bad habit of not letting my runners run enough, and I'm trying to decide what to do with my last lot. Any thoughts on Disney direction and fair value? I don't know about fair value. I don't look at fair value. If you go over here, and kind of the way I look at fair value is Disney here. What's the target price? 112. Where are you trading? 100. I think 112 and 100. 112 is your 52-week high. So they're saying it's reached its high. Lance, here's my guidance on Disney. I come from the cable world, and Disney was getting a free ride for many, many years based on ESPN and their bundle, being able to charge the cable companies $25 of the $50 that you paid for your cable bill. $20 went to Disney. $25 went to Disney, depending on the cable company. That is over. And they have not been able to pick up their streaming business to cover the downfall of the ESPN business with cord cutters, because not everybody that was paying for cable is watching sports. Not everybody wants the ESPN packages. And that's where the money has gone. So I think Iger is doing a fantastic job. I said it before. I think they pulled the kitchen sink out and they pulled everything forward into this earnings. I would say that the March shareholder vote is going to be key. If Peltz gets the nominations from the shareholders that he wants on the board, I think Iger's hands are strapped a little bit. I think he's kind of stuck. So I think Disney's going to be stuck. I think Iger could potentially step down and just say, F this, I'm done. I don't care anymore. Now, mind you, his fortune is in Disney. He's got a lot of Disney stock. But it's not like he's going to, have to sell his house in France if Disney stock, if somebody else takes over. I would not expect this to go back to 90. I would expect this to test 100 again. And I don't know when that is, but I would expect it to touch 100 again. Long term, I think you're okay. I don't think this is going to ever lead the market. I don't know that you're getting back up here to 170 anytime soon. But look at this long term. The 200 days at 126. I think if Iger is able to pull things out this year, I think you touch that. You look at how long it took once it. Let's see. We'll do this. We'll look at how long when it crossed the 200 day on the weekly and it got down to here. You're at 1 year, 10 months. and 1 week. 1 year, 10 months. You're down 20% since it crossed the 200-day. Okay? That's just since it crossed the 200-day. You've got 1 year. Now, as it starts moving its way back up, if we want to look at 1 year, where do we go? It's October 2023. So if we go out here to October 2024, that would be a nice 40% move to get back to the 200-day if it's going to continue flat. That would be a nice move, and that would be what? 1 year. Oh, it's almost 2 years. That would be out here. So yeah, if you're talking about 1 year, 10 months to go from the lows there back to the 200-day, you're talking about what? September 2025. So I don't think it's going to lead the market, but because you're a Disney family, because you go to Disney all the time, because you stay at it, I don't think it's a bad play. I just think you've got to, in my mind, I don't think it's the leading thing that I would have in my account, but I'm different. I don't have a family. I don't go to Disney. I'm not a big fan. I do have a friend who moved to freaking Orlando because he loves Disney, and he bought a ton of stock up here at 180. So he's hurting. He's really hurting. TG Homie, UPS. I'm not a fan. I mean, I think there's better things in the market. I just think there's better things in the market. You got death cross going on. You've got your earnings where you gap down. Just better things in the market, TG Homie. I don't know anything else about it. I don't have to see anything other than the fact that Amazon's going to take their lunch. Amazon's got their own service. What happens when Amazon actually starts allowing customers to ship through Amazon? They already do it for Shopify. Open up a little storefront. They've got Whole Foods. You need to ship a package. Do it through Amazon. So, UPS just signed that union. I can't imagine their costs are going down. So costs are going up. Abe from Facebook, it looks like. Or no, Instagram or something? I forget. Instagram maybe. Thoughts on Barrett? No, it's from Facebook. Thoughts on Barrett Gold? Barrett Gold, I'm not going to even talk about Barrett Gold because these guys, risk reversal, I'm going to include this clip for you in the newsletter. But Barrett Gold is I don't even know what the symbol is. Let's see. I think it's GLD. GOLD, Barrett Gold. Yeah. I mean, I'm not a fan of gold. These guys are. These guys have been more wrong than right. So, yeah. Not a good thing, but if you want to go into it, go into it. I'm not a fan. So, these guys do a lot better than I do. They're talking for gold to be at all-time highs. More for you from Instagram. I'm sorry, from Spotify. Wants me. Technical indicators suggest Palantir is overbought short-term. How high do you think it goes before correcting? I realize the market dipped on inflation news, i.e., where do you think Palantir is in 6 months? I have no freaking idea. If I knew where it was going to be in 6 months, I'd be pouring money into it, or on puts and stuff like that. I'm not looking 6 months out on this stock. I'm looking 5 minutes on this stock. This stock has a crossover here on the MACD that's probably coming down. You've got a button hook going on here. You got a gap down below. The only thing that's going to push this higher is inclusion in the S&P. That's the next catalyst on this. That's the next catalyst. So I said it back here. If we hold the volume shelf at 1980, I think it should move up. I said, at 1980. Well, it held at 1980. And so if you bought in after earnings, you've been rewarded. You've been greatly rewarded. That's the stock. That's the point where I think 1980, it comes back to at some point in time. But if they get included in the S&P 500, expect a pump. I don't know where it's going in 6 months. Honestly, I don't have that much stock in this. I have my money in SMCI. I have my money in Apple. I have my money in NVIDIA. I have my money in Amazon. I have my money in Netflix. I have my money in QQQ. I have my money in all that stuff. So where it's going in 6 months, I don't know. I mean, here's the thing. Do we have a World War III in 6 months? Do we have a dead president? Does Biden back out of the election? Does he step down? Does Trump win the election? You're talking a lot of things can happen in 6 months. And Palantir specifically, maybe we go, maybe the Fed says, hey, we ain't taking rates back. Well, that affects Palantir because look at the forward PE of 60. Look at the PE of 266. What's the catalyst to get these earnings up to this PE level? I don't know. But I just don't think it's going to, I don't think it's 30. But long term, I think you're fine. I think you're fine. Palantir is here to stay. It's not going bankrupt. They've turned a profit. So more for you. I mean, 6 months. I can't look at the stock for 6 months. I can tell you today. Let's see. It's up 1%. I think it's going to pull back. I think if you put in a shelf here, you're probably putting in a shelf for a leg higher. But 6 months, I don't know. I mean, SMCI in 6 months, I think we're still on the AI train. If Palantir follows SMCI and follows NVIDIA and they're part of the AI train, I think you're higher. So, Fisher 88K from Spotify. Love your show. Are you concerned about the recent falls from earnings due to pricing perfection? Or are you using it as a buying opportunity? Looking at NVIDIA earnings, I went over this. NVIDIA is priced absolutely to perfection. They have been for the last 2 earnings, and you've seen it pop on the last 2 earnings. I think the AI train is running. I look at pullbacks as buying opportunities. I look at highs as trim opportunities. I'm not looking at anything in particular, but NVIDIA, I think those earnings that come up on February 21st, I think that's going to drive the market. I think 100% the market is focused on this. If NVIDIA blows out earnings and things go higher, I think we just get, that all of AI, it's going to pull up higher. So, and Mike just said, SMCI just broke 850. So NVIDIA is not up to over 800. It's at 735. But SMCI is up 7% at 850. Let this be a key. Yesterday, we were down by 2%. SMCI was up. Okay? SMCI was up. This points to nobody wants to sell this stock. What's the price that's going to get you out of SMCI? And I can tell you, the catalyst of people selling is going to be February 21st. So I don't want to say that you're crazy for being in SMCI because I think even up here, the valuation isn't nuts. It's high. For a hardware company at forward PE of 29, a PE of 65, that's high. So understand it's super high. I may trim some of my freaking, I can't trim my brokerage portfolio because that's short-term taxes. And I don't want to do that. I went over this for the paid newsletter subscribers. DEX, you mind taking a looking at Dexcom. It's run. I mean, listen, this is a glucose monitoring company. It's a medical devices company. Dexcom here in the 4-hour algorithm. I mean, up until earnings, you topped out there. This line at 125, I've said it many times that buy above it, buy below it, sell above it. And when it got down here to 89, hopefully you were dollar costing averaging. But I think that's the line where you've got it. And if we go and we look at a weekly, it's even more clear on a weekly that 125 price right there, that's your pullback. So buy it at 115. If you're happy, dollar cost your average way down. And then that 125 Dex. That's my best bet on this other than not knowing anything else about the company. I think Apple Watch will take them over at some point in time, but nothing too soon. Scans. There's a bunch of them. A lot of them don't mean anything. And the reason it doesn't mean anything, FNGD, which is an inverse, 3-time inverse on the FANGs. TECS, which is the 3-time inverse on the technology. HIBS, which is 3 times inverse on, I think it's the S&P. Let me see. HIBS, it's 3 times short on the S&P. These are daily, and it doesn't mean anything. I mean, just understand you got a cross up, you got an entry point on the algorithm, but you have no confirmation. We're in a bull market, so don't buy those inverse ETFs at all. I would say stay away from them. But again, you want to make sure that you look at these, because if there's a stock that you want to enter and it shows up on the scans, look to enter it. If you want to. That's how you use the daily newsletter. And the daily newsletter, so it's broken down into a couple of things. I'll go over it. At first, I put in some sales stuff on tools that I think you should use. Again, to the point yesterday, These are sales, affiliate sales that save you money on tools that I use. That's it. Then I put in some market stuff and some stocks that I may want to trade or buy. And then I put in the links to the podcast. That's kind of the breaker. So you can listen on Spotify, you can listen on Apple Podcasts, or you can watch on YouTube. By the way, the Spotify is a video episode as well if you have Spotify. So it is a video and audio. You can watch it there. If you're going to watch, I'd say YouTube's probably the better place to watch. And then I put in the pod notes. And the pod notes is everything that I went over. It's all the articles. It's all the videos that I post. It's everything that I went over, nothing more. You can go and you can read about it. Then the final part is the scans. These are scans of stocks that look bullish in the 4-hour algorithm. So if you can't afford TrendSpider, if you don't want to buy TrendSpider, this is the place to look for the 4-hour algorithm. And these are stocks that currently are bullish. Now, yesterday I told you, hey, we're probably going to be down because CPI was down. Understand this is a lagging 4 hours. It's the previous day's candles. It doesn't include extended hours. But if you're looking like Bank of America, if you're looking to get into Bank of America, that 4-hour algorithm could help you. Yesterday it had a buy here at 33.12. Today you're at 33.09. So, again, if it looks at 33.12, I'm typically looking at a 5-minute candle to try and get in. That's just the way I trade. You're going to need to do your own due diligence and find your own system. But typically, I'm looking at a 5-hour candle. And yesterday, if we look at it, here's February 13th. Even though you got this 33.12 cross up on the 4-hour, it opened up at 33.34 and then just kind of dipped down. And so where'd you find actual confirmation? Here at 32.91. So hopefully you bought at 32.91. If you did the afternoon, man, you slid down. Maybe you waited and you had something to do. Well, maybe you got in here at 32.53. Maybe that's where you got in, 32.53. And then you come up here and you can see 32.33. You're up. Now, this gap up here, I completely expected to get filled to 33.61. So that's yesterday's. This is the financials. Again, kind of just the way to look at it. Remember, don't sleep on the TrendSpider sale. TrendSpider is going on for another 15 hours from the time it's now 10 o'clock. So it's another 15 hours. It is you save $1,100, $1,192 to be exact. Don't sleep on that one. Don't sleep on the Alpha Picks one too. Even Diane, I think it was Diane who said it. Yeah, Diane, she just signed up for Alpha Picks yesterday and on YouTube Live. She said she watched the latest recorded webinar. And yes, there's a webinar. Yes, they include video. Yes, they include audio. Yes, it's an actual analyst doing analysis of their picks and their portfolio and telling you what they think of their portfolio. It is for $89 for 1 year. And the reason you want to get this is not because you're day trading, not because you want some stock tips on a daily basis. The reason you're getting this is this performance of 105%. I think it's even up more now. Let's see. Let's go over to Seeking Alpha and let's see what their performance is. Because the reason you're getting it is the historical performance and the fact that they have just a knack of picking stocks that are significantly better, 105% versus 30% on the S&P. Yes, they have SMCI. Yes, they have MOD. Yes, they have MHO. Yes, they have AMR. These are all super, super high flyers. Yes, they have Uber. Yes, they have BXC. Some of these, I don't even know. Travel Centers of America, it's up 56% since they bought it. They closed their position just today, or no. Yeah, they closed their position last year, but it was up 56%. Meta, they're still in. They got in just in August of last year at 306. So, again, it's 105%. This month, it is Twilio. I'll probably stop going over the exactness. So get into it. It's $89. Again, if you want to support the podcast, that's one way to support the podcast and get something in return. You can sign up for my paid newsletter, get Alpha Picks, but again, support the podcast. It is going on. I just don't want somebody coming in and saying, oh God, it's now $469. I missed the $89. Can you help me? I can't. Once it's over, it's over. And they ain't going back down to $89. They raised the price from $199 to $499. You think these guys with 105% since July 1st, 2022, that's 105% in less than 2 years, like a year and a half. So that's why I don't want you to sleep on it. If you have any interest in this, you can watch the webinars. It's really, in my mind, for somebody that's buying and holding, I think it's a great play. Okay. I will talk to you tomorrow. Take care. Have fun. Bye-bye. Oh, enjoy your Valentine's Day. Bye-bye. Oh, I don't want to take these off. Can I laugh? Yeah. I think it is weekend at Bernie's, to be honest with you. And Chris, full disclosure, I don't regret voting for him. I don't. Well, the alternative was worse. That's the thing. And Jon Stewart's rant, if you want to see a great rant, I posted it yesterday. It is absolutely phenomenal. Jon Stewart's first day on the Daily Show was yesterday. And his quote yesterday was great. It's a video. I know I posted it. I was busy on Twitter yesterday. This was great. If you haven't seen that one, that was great. This is his rant. Jon Stewart kicks off the Daily Show. The greatest thing was the only thing that these two have to look forward to is a Smucker shout out on the Today Show. And if you don't know, when you reach 100, they get, I forget the weatherman's name, but he gives you a shout out, a Smucker shout out on the Today Show if you reach 100 years old. So that's it. Yeah, Scott, I don't, if you want gold, it's not, listen, I'm not going to fight you that gold isn't a good investment. I just personally have never seen the benefit of gold. Perry Carr. I mean, this is, they had their earnings. They had their chance to pop. They had their chance to go up there. I don't like it. I mean, do I want to buy this dip? No. I don't think it's a very well-run company. I think you're seeing it dip below the 200 day because I think it's had its day. So that's just my thought on it. But I don't know anything more than this chart. The chart looks ugly. I wouldn't buy into it. No. Wait for Uber, Pavan. If you don't own Uber, wait for Uber. I don't know that it will come down anymore. Yesterday was the day to get into Uber. But don't get in today. I think you'll have a chance to buy it at about 70. You're up 10% at 76. I think you'll have a chance to buy it at 70 to 72. I think the days of 60s are done. But I think you'll have a chance to buy it between 70 and 72. I think the Brad Gerstner quote 1 year ago, Uber today laid out path to 10 billion EBITDA and 9 billion free cash flow by 2026. This is the brilliance of Brad Gerstner. He has called Meta. Oh, look at this. Look at this. Summed up in one video. Is that a guy or a girl? I can't tell. Can you look at OWL before you leave? OWL. Let's look at OWL. What the hell is OWL? Is this one of the AI plays, I think? Blue Owl Capital. Chart looks good. What is OWL? And then I'm going to go. Asset management. Let's see. Dividend, financial, Blue Owl Capital. I don't even know what they do. They're up 18% year to date. They are at their 52-week highs. They're 3% away from it. Average target price $18.94. You're trading at $17.66. January 4th, $17 price target. I don't know. What interests you about AL? What's, 10% owners selling at $15.81? Large lots. What makes you think this one's a brilliant one? It's held by VTI. We can go over to Seeking Alpha and look at AL. Blue Owl Capital. Strong buy. But I just don't know why. Market cap, $24 billion. Dividend growth forecast stock. I think it's a dividend stock. I don't know. Financials. 6 out of 92. It's number 6. GBDC. I don't know anything about these things. If this is a regional bank or top asset management, honestly, Tony, this could be a builder's resource or builder's first, where I just don't know enough about it. But they've got a strong buy. Char looks good. But are you comfortable buying at all-time highs? That's the real question. Because if you go back here and you look at a weekly, you're buying at all-time highs. So what makes I would put it back on you. What makes you excited about it? GCT. And if you can give me a reason why they're at all-time highs. GigaCloud, I think this is one of Shay's big ones. GCT. This one does. It's technology. Yeah. Tony, if you're in at 1505, fantastic. But, I don't know. Financials, maybe there's something I'm missing there. Just doesn't get me excited. But I would never get in at 1505. Again, you're at 18 on AL, 17 or 18. I wouldn't have gotten in at 1505. I just don't find it compelling. But that's me. We're all different in our objectives and strategies. So, morning, Sherry. Mike, GCT, or Peter wants me to look at GCT. Look at that trend line. That's a great trend line. Average target price, $29. You're trading at 31. 52-week high, 33. It's a $1 billion market cap, so it's not a huge company. 17 million shares floated out there. No dividend. Yeah, and Tony, I don't mean reallocate the funds. I mean, if you're gung-ho, and realize this, and I tell people this all the time, there is a reason I own every stock in my portfolio, and I can outline it for you. Apple, AI. Bank of America, largest bank. I like it. Let's see. I can, if you can't give me a reason why you like OWL, then, to go to fit all-time highs, then yeah, my guidance would be get the hell out. By the way, I'm not up a lot today. Even though the NASDAQ is up 0.78, I'm only up 0.09. I bet it's Apple. But let me look at all my all positions. Amazon, AI. We're going to go. Salesforce, AI. DocuSign, because it was supposed to be taken over by private equity. Just haven't sold it. Devon, I thought the energy play was good. I got to get out of it. Etsy, I still think Etsy is a great brand. I like it. Google, AI. IGM, AI. Coca-Cola, it's trading under 60, but I still hold a bunch of it. And the reason it is a solid play. Mara, crypto. Meta, because AI and everything that it's doing. MPLX, it's been a solid dividend performer. Microsoft, AI, Netflix, they're just killing it. NVIDIA, obviously, why? Oxy, Buffett, PanW, that's cybersecurity. PepsiCo, because I love cola. Pinterest, I played the earnings. Got it wrong. Need to get rid of it. PayPal, got to get rid of it. QCLN, because I am still significantly up and I believe that solar will come back. QQQ, obviously reasons. Shopify, I'm a big fan. SMCI, clearly. Snowflake, because I like the stock between 150 and 200. It's still on a run at 231. I will not trim it. I will not sell it until it gets below, or I will buy more under 200. Square, I'm not a big believer in it, but I like Jack Dorsey. I still own a large part. Target, because I think it's a $170 stock, even though it's at 144 and down a little bit. Uber, big fan of it. Ulta, largest beauty. Wells Fargo, because that stock is on a turnaround. I bought it on under 40, and it's going to be a $50 stock. It's at 48. Walmart, just largest grocer. I shop there. XLK, clearly. XLY, yeah, I own it because, Tesla. So I can give you reasons for every position that I own. If you can't give me a reason and you want me to tell you what to do with a position, that's not a good position for you to be in your portfolio. You've got to understand why you're in these stocks. And it's why I like Shea Bular on Twitter here. Shea is just unbelievable. And he puts it out there every day. Where is he? Savvy Shea, I think it is. Is it Savvy? Wow. There it is. There he is, Shea Bular. He puts it out there 100%. Him and the stock nerd, Brad Freeman, they put it out there why they own these stocks. And so if you're in a position where some douche on the internet told you to get into, and that's why you're in it, wrong reason. If you're in there because you believe that financials are coming back and this is at just a beaten down stock and they have some type of strategy that's good, that's a good reason. We can debate that all you want. You can't argue it, but you can debate it. But that's where I'm trying to understand when people ask me about stocks. I can give you my opinion, but Dex, who asked me about Dexcom, I don't know anything about it. I know it's a little bit of a glucose monitoring thing. So, but Tony, I don't mean to say get out, and I don't mean to pick on you or anything, but that, if you can't grow down, today what you should do is go to your portfolio and scroll down while you're in stocks. And you should have done it yesterday even, because yesterday, if you're nervous about the fall, find out why you're in those stocks and then look at the charts. And if the charts are justifying a sale or a trim. It doesn't mean you have to fall in love with stocks. You don't fall in love with them. But if the story changes, you should get out. And it was why, the story changed on Target. I wanted to get out, but I was like, it just never felt right for me to get out. Story changed on Sedge. I got out. Let's see. Story changed on Pinterest. I should get out. Story changed on PayPal. I will get out. So again, in my mind, when you're a fundamental and a technical trader like I am, or investor, you got to kind of, put those things together and make sure that you're doing the right thing for you. So, okay, let me look at GCT. Where is GCT? I think the valuation is what's going to kill this one. GCT, GligaCal. Valuation C-, so it's not horrible. Ranked number 1. Stay away from the controversial name. What the hell? Logistics, GCT has experienced strong growth despite a poor furniture market. Rising ocean freight costs. Logistics business, a business market for large parcel products such as furniture, fitness equipment. Its B2B platform connects buyers in U.S., Europe, and Asia. and will transport products. Opportunities and risks. GCT have been growing rapidly, propelled by adding more buyers to its platform and buyers. Ocean freight rates is another risk. Yeah, that's true. Valuation currently trades at 10 times the 2024 consensus. That's not horrible. And 7 times the 2025. Yeah, the valuation isn't horrible. It trades at a forward PE of 13 times, which isn't horrible, 2024 consensus, and 10 times 2025. Revenue growth is expected 32%. Given its growth, GCT could easily be valued at double where it trades today. Yeah, if you think GCT is legitimately going to grow revenue over 30% per year, this stock is a clear buy at current valuations. The company has said it will look to shore up its filings in 2024 with regular 10Qs and 10Ks, the same as a domestic filer. Oh, it's not a domestic stock. It's not a domestic stock. Where's it traded? So now, let's see. Oh, it's got a California address. Formerly known as Oriental Standard Human Resources Holdings Limited, changed its name to GILD in February 2021. I don't know that I'd get out of it for that reason. But anything that changes its name like that and so changes its direction so precipitously, I wonder if this is hype. The valuation's not crazy, but that's just today, this one. So I'd be, watching the chart on it. 1 year, it's up 542%. I mean, that's a lot in 1 year. You take a look at this one from here. We even talked about this. Look at that trend line. If you want to look at a trend line per se, we can take a look and we'll draw from this. We'll touch. We've definitely got 3 there. If you're thinking that this is the high, then you're fine continuing to buy if it continues that trajectory. But I don't think that it will continue that trajectory. We can look at from the lows here. We'll do this. Excuse me. Your downside might be about 29 or so if you break that. I mean, look at the MACD and the RSI. It's high to buy into, but oh, you're welcome, Mike. And FYI, I'm a douche on the internet. I could be completely wrong. Understand that there is nobody that can tell you the absolute direction of stuff. I'm just guessing at best. I mean, SMCI at $875. SMCI is going to $900. That's crazy. That is just nuts. Let's see. SMCI. My total gain in this so far is 6 figures. It reached 6 figures. Yeah. Yeah. Okay. I am out of here. I'm going to go put the newsletter together. Remember, don't sleep on the alpha picks and the TrendSpider Valentine's Day sales. You ain't going to get better pricing, I think. So Twilio, so there's two reasons why I like Twilio, and it's because the alpha picks have it. I think you buy it under 70. I think you'll be fine. Twilio, its average target price is 74. So I don't think it's horrible. HSBC downgrade 61 to 60. Yeah. I mean, you can listen to the monkeys. These monkeys, they look at these guys. This guy on December 13th said raised his price target from 70 to 80. This dude on January 12th raised it from 75 to 82. We haven't seen those. The 52-week range goes up to 79. So, you might be capped at 80. Do they have earnings coming up? Or when's their? Yeah, it's tomorrow. I'm waiting until after earnings. I have not gotten into this. I wanted to get it at 69, 61, 62. That's where I was thinking that it was going during this initial downturn here when it got to 68. But see you, Pavin. I don't think it means anything. I do need to put that on my list, though. Okay, I'm out too. Happy Valentine's Day. I am celebrating tomorrow. So, okay, if you're here, okay. I'll talk to you guys later. Bye.